So here we are, another episode of Wolfe Bites. Excited, I've got Michael Donofrio with us. We're going to talk some cost segregation and just general tax and other advice. Michael, great, great having you, and thanks for your time here today.
Thanks, Barry. Always love meeting with you. There's so much we can do together. Hope you're well.
Absolutely. No, doing fantastic. So obviously we're still waiting for everything to open up. You're in Charlotte. I'm down here in Florida. I think North Carolina is probably a little ahead of Florida, or at least ahead of South Florida as far as things getting open up. What are you seeing out there right now, whether it's just in general, but also from a business standpoint? I know you're involved. We chatted a little bit as far as obviously your cost segregation, the CARES Act, all of that. What's kind of keeping you busy, and what's your focus right now?
Well, I've been very busy helping clients, in the short term, helping to weather the storm. A lot of clients that are looking for additional strategies in terms of cash flow and liquidity, and we were doing a lot the last few weeks with strategizing around the PPP loans and EIDL and Main Street lending program, and dissecting what came out of the CARES Act of what might be the best immediate term strategies for those situations, and some clients yesterday, in terms of what's going on with their lease situation and cash flow. But overall, it's been positive for most of those, and especially what came out of that CARES Act, as you mentioned. There's some massive new additional tax benefits and strategies that I don't think many real estate owners and investors are even aware of. But I've been doing a lot of education around that.
I'd say, what are a couple of those that you are working with folks on in that regard that people could take advantage of when they really do need the cash?
Great question. And I mean, some of the clients I was talking to this morning were investors in net lease type properties, and then others that were traditional multifamily owner operator and investors. So these comments apply to all of those situations, some even more so than others. But the CARES Act had some really important tax provisions in there for commercial property owners and investors that they really need to be aware of, especially as it relates to, number one, the increased loss limitations. There were traditionally some limitations on the amount of losses that one could take in a given year, and they increased those limitations. And they also increased the opportunity to look back into prior tax years to help generate some possibly some immediate potential tax refunds.
Which could be
one thing specifically that they put in,
which could be great timing.
Oh, perfect timing. Yeah, absolutely. The reason I think they put these two provisions in there, again, this is just my opinion. I think that they realize that the PPP loans and other programs might not be applicable to many different real estate owners, operators, investors in different situations, and other companies. So you could go back into those prior year tax returns, and they implemented what's called a 5-year loss carryback. So things that we do that I know you're very familiar with cost segregation and really maximizing the depreciation and the write-off in those buildings. Of course, we should look at utilizing that against a 2019 tax return, which we all have an extension to July 15. No penalty, no interest on that extension, and still you can extend it further. But let's look at applying those additional losses and maximizing it with cost segregation into 2019. But now we can also, especially for real estate professionals, could potentially go back into 18, 17, 16, 15, and 14 tax returns, and any of those losses in the current year can be carried back. And without doing amended returns for the next 30, 60 days, we can extract some of the taxes that were paid. This is your own money that you paid the federal government. They're giving you an opportunity potentially to get a refund back in those prior years. So you ask what we've been doing the most of, it's helping real estate owners understand those provisions, right, see how it applies to their tax returns, and maximize the situation they have on their property. And if we can generate additional cash flow, let's put it to work in the next property as well. I mean, I think you've seen, especially some of your property types that you work with that are virus proof and essential businesses that folks are asking us about all the time. Even though there's less transportation at the moment, those gas stations are still operational, and there's a lot of people visiting them for fuel and a lot of other products. The CVS's, the Walgreens, the Starbucks, the others. I mean, those are extremely busy locations that folks are looking for investment opportunities.
Absolutely.
And
the QSR.
there's massive tax.
Exactly. Even the
Yeah.
QSR.
What are you seeing? What are you seeing related to those kind of properties? You and I didn't even get to talk in the last week.
It's been very positive, actually. I mean, I was talking with a Zaxby's operator yesterday. Their sales were initially, first few weeks of this, were off, relatively significantly, but they made some adjustments to the drive-through process, and now they're actually year over year ahead, net positive. Some Dunkin' operators, net positive. So now a lot of these guys that have, have really figured things out. Texas Roadhouse, who has really never done to go hardly at all, is now,
Right.
Tremendous increases in sales, not year over year, but they've really figured out not drive through for Texas Roadhouse, but to go. So now we're seeing some very positive signs coming out of the restaurant sector just in the last couple of weeks in reality.
So clients that I talk to every day that are looking for some tax savvy type of investments where they can do these cost seg studies. I mean, you and I have been a great team. You have those kind of properties available and are still available on the market right now, I believe, right?
Yeah, no, absolutely. And I think it's an opportune time to be acquiring some of these properties. As you mentioned, the 1031 deadline extended till July 15th. So now we've got a Burger King as an example out on the market. We're getting tremendous interest in. There's still buyers out there that are, mostly 1031 driven, that are still looking in these deals. I mean, got a drugstore deal in Virginia. We're getting a lot of interest in. Again, one of those essential services you talked about. We got a grocery store in New York City or on Long Island. Again, essential services, getting a lot of interest in. So those are the types of deals that are getting interest right now and are certainly opportune for what you do with cost segregation, for sure.
Awesome. Remember, you promised me the next good ones that you get. And remember, I live in Charlotte, North Carolina. So if anyone's around the area, we should meet up and have a virtual beer together soon. But you're going to find me some stuff in the Carolinas. Not that I need to be near the properties or anyone needs to be near the properties, but I guess there's somewhat, folks have geographic preferences. And, for state tax provisions, sometimes there's additional benefits to having properties within the same state that you live in. Not that you need to, but yeah, the cost seg benefits and those net loss carrybacks. Remember, I could purchase a property if I happen to be a real estate professional for tax purposes, and I know some of your investors are. Remember, think about this. I could purchase one of your properties right now, maybe that Zaxby's or the whatever property that you mentioned, and hopefully get a decent, a decent cash flow on that property. But I can then purchase that property this year in 2020, right? And then we can take any additional losses backwards into 18, 17, 16, 15. I'm not sure your investor clients understand all that. So that's something that I wanted to reiterate on this call, that's very important. These tax provisions are not just retroactive, it's all the way through the end of this year, 2020. So that changes the, that changes the overall ROI on any investment, which is and I think we all experienced a ding in our stock portfolios. If you got anything in the stock market, most of these real estate entities didn't go down in value, 30, 50% overnight, like some of our real estate portfolios have. I mean, our stock portfolios have. And I don't get any of those tax benefits and depreciation that I can cost segregate on my Apple stock or my Nvidia or other investments that I have. So, man, I always love talking with you. You come up with some good ideas.
As a real estate professional, you're able to offset, do cost seg and offset that against, unless I'm mistaken, your ordinary income.
That's right, and that's an important distinction, and it's maybe a much long tax technical discussion for certain clients. But you're right. There's a difference between active and passive, from a tax and a real estate investor point of view. If someone can get to that active status as a real estate professional or real estate professional for tax purposes, that allows you to utilize that depreciation and the write-off against the income on that property, as well as potential other income that flows into that tax return. And there's some ways that you can absolutely get to the active status. There's so many hours and activity that you need to participate. You don't have to actively manage every single property, but there's a lot of things that you can do to get to that status, and many of our clients do, and we can help. And I know you're aware of that process as well.
I say that could even be, I've got clients that are just as simple as spending time surfing the internet, looking at properties, going through CoStar, going through LoopNet, looking at deals. That all counts.
Yeah, that is legitimate time. I mean, you
Yeah.
can't do it by just doing that, but yes, researching, working out the financing details, going through the due diligence process, lining up the insurance or management, or working with your investment sales professional like yourself, uh, you know lining up different things in the capital markets, and working with other investors in your capital stack. Those are all qualifying time, towards that active real estate professional status.
Right. Well, appreciate all your help, certainly on the cost seg, and we'll certainly let you tell people how they can get in touch with you. But out of curiosity, I mean, we're both sitting here working from home, a lot of challenges, it's a challenging time, but being positive, is there anything positive you've kind of taken out of this that you're going to move forward and it's going to help you as you go forward with your business and your personal life?
Yes. Number one, financially, this reminded me and some other clients that, I mean, for years, I should have been doing nothing more than investing in more real estate, and certain types of real estate. I think, these times have really taught us, what's important in terms of what we need and don't need, and what becomes essential from an investment standpoint, and then that trickles down into real estate. And if I could layer real estate, with the tax attributes of writing things off, and maximum wealth preservation through tax minimization,
Yeah.
and real estate's the best. So that's number one. Is I would have done that a long time ago and done a lot more of it. I've learned through some of my mentors and my partners and folks like you. I should have been doing more real estate and certain types of real estate. And then number two, this time with my family, this time with my friends, like you and others in our business. I cherish those times together in person, and I think those times that we spend together are going to be even more important for us, and we're going to hold those, as very important times in our life. Because I've spent a lot of great time at home with my family, but I miss my clients and my friends in person, having that beer, or just hanging out together.
I guess those conferences we kind of took for granted, and yeah, lots of times. You're right. So
yeah, exactly. But those conferences are excellent. But just the friendships made, the deal flow talked about, the strategy ideas that that we meet and talk about. Those are important times that a webcast or a virtual call like this sometimes doesn't all come across.
Yeah. So no, thanks so much for your time. How can folks best reach you if they want to learn more about cost seg, tax saving strategies? I know you guys go beyond just cost seg. What's the best way for folks to reach out to you?
Yeah, absolutely. My direct number is 561-762-0044. You can text me or email me at mdonofrio, that's DONOFRIO, at Engineered Tax Services, or ETS. We're based in Palm Beach, Florida, but we're a national firm. I also live in Charlotte, North Carolina with my family, but we work all across the country with real estate investors, owner operators, developers, but also specialize in all the other tax credits, the federal, state, local incentives, credits, rebates, opportunity zones, historic, solar, renewable credits.
Oh, wow.
So anything that we can do to maximize it on that property, we're on it.
Sounds good. No, thanks for your time, and be safe and be well.
Thanks, Barry. Appreciate it.
Likewise.